Hello traders and welcome to another video review. Today is Monday, June 12, 2023. Let's find out what is going on the Forex economic calendar today. As you can see, there isn't any very important data scheduled for this today. There are some apparently low importance and medium importance data scheduled from at least data from the New Zealand, data from Japan in form of the producer price index and machine tool orders. As you can see here, we got data from US later on during the New York session in form of the 3-month, 6-month, 10-year and 3-year note and bills. Auction at the end of the day at 8 o'clock. The most important event of today is the federal budget balance for the month of May. So generally economic calendar is empty today, so let's find out what is going on the charts, and I think we should do the review of the majors. Euro-dollar 4-hour chart is looking corrective. Because still this market here doesn't actually looks like a bullish market. So what do we have here is a typical movement to the upside in form of the ABC corrective pattern. So we got the technical support at 1.0636. Now we have the wave C high, which is located at 1.0788. That means this high, this ABC pattern possibly might be done. So we got the low here, we got wave A, somewhere here is the bottom of the wave B, and the wave C to the upside. So the corrective pattern is done right now. The technical support, the intraday technical support, is located roughly around 1.0740, and then there is one more just below it, 1.0733. So as long as we trade above these levels, then the outlook is a little bit bullish, because the momentum is still positive. However, any violation of this level to the downside would likely put the 100 periods moving average to test 1.0727, and then the breakout to the downside will likely occur. The lower level, the lower technical support for today is 1.0668, and in that situation, of course, if this level is violated, we should expect another movement to the downside, and this time this will be, of course, the lows, the technical support, very important technical support at 1.0636. So the outlook remains a very in the short term slightly bullish, but this ABC correction is only a part of the a larger downtrend, and it looks like as soon as it will be finished, the market will move lower. So please keep an eye on the Euro-dollar 4-hour chart. Let's switch to the other chart. This time it will be, of course, British pound. What is going on the British part for today? So what do we have here is another movement to the upside. Please notice the fact that we are approaching slowly but steadily the swing high from the May 10th 2023. This swing high is located at 1.2678. So this swing high is the next target for bulls. The technical support is now clearly visible at the level of 1.2533. So there is no doubt about it, and the other level is 1.2533. So we got these two levels here. Those levels will act as the technical support. We are trading above the 50 and 100 periods moving average, but if we take a look here, we should see the extremely overbought market conditions, which means in that situation that the pullback lower is widely expected. The local high is located at 1.2589, and we should expect this market to drop lower pretty soon. So pullback to the downside, maybe even towards the level of 50 on the British pound. That won't be any kind of surprise here. Otherwise, this chart looks pretty good for the movement to the upside, because if you take a look here, we might assume that there is some kind of a let's say some kind of a channel here. If we make this lines rather thicker, you can see that this market is moving inside of this kind of a corrective channel. So the upside movement is kind of a limited right now. It's kind of a limited because we have the upper channel line here, and we have this local technical resistance located here as well. So I'm doing my screenshot and waiting for the market to rather come lower than it is right now, because of the momentum and the about market situation. Gold. What is going on gold? Well, very dangerous times ahead of the gold. Why dangerous times? Let me just take a look here. Look, $1,931 per ounce of gold is obvious here. We got this situation. We got this situation here. 1,982 is the range high, and the upper level, of course, technical resistance, upper side technical resistance. Maybe 1,984 will be the technical resistance as well, but that's only like $3 higher, so doesn't make that much difference anymore. However, look at this. We have a almost perfect squeeze here. The tightening and the rage trading on the gold market, it is visible and it's clear to notice. What do we have here is, of course, the market trading in a very narrow zone around the level of 50, up and down. It's not going from the oversold to overbought, oversold to overbought. It's more likely even it's like a kind of a market that is doing the whipsaw trending up down. So what it means that there is a fight between bulls and bears. Both of them, they don't know what they really want actually, what should be the next move of gold. However, we can clearly see that intraday technical resistance is 1,972. Intraday technical support just made 4 hours ago, 1,953. And what's really important is that this moving averages are getting squeezed, are getting closer to each other, which means, of course, that we might see some sort of the very extreme movement soon, because if the price will squeeze, then of course there's explosion from this very close area. So please keep an eye on the gold market as well. And last but not least, because of data from the Japan, let's take a look at the US dollar to the Japanese yen. What is going on here? This is apparently a little bit concerning right now, especially for the bulls, and the reason for that is I will just show you a possible outcome of this let's say of this situation here. We have possibly a triangle building. So what I see here is like a kind of a lower line here, and of course we got the upper line, and the upper line is located like here. So on the US dollar to the Japanese yen, let me just take my labeling as well. We got the Elliott wave, or it can be any other kind of accounting. So we have wave A, wave B, possibly wave C, wave D somewhere here, or maybe it's not finished and we'll go here. What we need is wave E, and then of course in that situation triangle would be a continuation pattern. Okay, what continuation? Trend continuation pattern, where it would go to the upside. Where exactly? 140.94. This is the level, the next target for the for the boost, but not the last target. This is only the nearest, the next target. For boost, support 138.46, fine. So what we are expecting right now is a burst to the upside after the triangle is done, and movement above the level of 140, 141 on the US dollar to Japanese yen. Markets only a sustained breakout below 138.46 would invalidate this possible triangle pattern. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.